Hi everyone. Let's start with our new lesson called Petty Cash Book. Uh, you would prefer to have a look at our previous topic, which was cash books. So this is also another cash book. Not all businesses keep it. Very large businesses, they prefer to have this book also in addition to the cash book. So just to make a distinction, now we can call our cash book that we did previously as our main cash book, and this particular one can be called as a petty cash book. So to begin with, let's break up the term and circle the word petty and make a notation. This means small. So the word petty means small. Just bear with us for a second. So basically we are talking about small payments of cash and small receipts of cash. And the examples for the small payments could be, so let's list a couple of examples. Small petty cash payments will be, say, buying stationery or paying for cleaning expenses, paying for, say, cleaning expenses, or buying small office supplies like staples and papers, etc. So buying small office supplies, etc. So these are all examples of small payments of cash. Now when there is a main cash book, you could have recorded all these small payments in that cash book. But some businesses prefer not to, because they do not want to overcrowd their main cash book with the small payments. These payments are mostly made by cash, so there are no check payments in the petty cash book. So remember that, only cash payments. So we'll make a notation on the side: only cash receipts and cash payments. So it's only cash receipts and cash payments, so there will be no checks here, and there will be no discounts also. So you would notice that there is only small cash receipts and cash payments, so no discounts, no checks. And in some time, when you see the format or the layout of this cash book, you would notice that there are no check columns or discount columns. So this is the sort of introduction. The syllabus component is 2.22 to 2.24, and the textbook pages are pages 95 and 97, and you will do the reading from those pages. So let's go on to the next slide and see how it looks like. So this is how the petty cash book looks like. So if you would prefer, you can stay on this slide for a couple of minutes and see how the columns look like. So if you see this black bold line, this is the division here. So if you notice, this line is excuse me, this. Okay, we had to pause the recording for some time. I just had to go get my coffee. So let's resume it. Now if you see this black line, if you remember, in the cash book we had divided our columns roughly equally, so on both sides of the black line there were same number of columns. So here you would notice the number of columns on the payment side is much larger. So there is date, details, total paid, and then there are columns in red. These columns, there are 4 columns here, but there is no fixed number of columns. It's just for showing you here, like there can be any number of columns for analysis. In a while I'll come back to it. So again, the green area, if you see, this is your cash coming in, and if you see, there is a total received there. So total received, this is the cash coming in, and then there is a total paid there. And then the total paid has been split into categories, that what did you pay it for: stationery, traveling, cleaning, and the last column is other than those 3 columns. So if there is a payment which covers other than stationery, traveling, or cleaning, then it will go to the others column. So analysis columns will be decided by the business, how many they want to keep. So the cash here, when the total received, actually, let's sort of talk about the system on which this cash book is kept. The person who does the main cash book, he can be called as a main cashier, and another member of the staff who could be a junior member of the staff or an internee, he can be assigned this job of keeping the petty cash book, and we will call him a petty cashier. So this cash book will be kept by a person or a member of the staff, and we can call him petty cashier. He will be provided with a box with a lock and key, and he'll be given a certain amount of money to begin with, and this is the money which will be the total received in the beginning. So the main cashier will give to the petty cashier amount of money to begin with, and this amount will be called as float or impressed amount, and this will be recorded on the receipt side. Then the petty cashier, he will have vouchers with him, which are the source document to record in the petty cash book. We'll show you this voucher in a while. And the petty cashier will make payments. Anyone in the office who needs money for stationery, traveling, or cleaning, or any other small payments, they'll go to the petty cashier. They'll not go to the main cashier. They'll go to the petty cashier, and they will tell him what do they need the money for and how much. And then petty cashier will make them fill up a paper called petty cash voucher, where they will fill up the details, the name of the person who's given the money, and the person who approved the payment, and then the money will be given, and it will be recorded on the petty cash voucher. And then this person, when he comes back after spending the money, he'll be asked to excuse me, and he'll be asked to provide a receipt. So he will give a receipt to the petty cashier, and the petty cashier will put the voucher and the receipt together to verify that the payment was made. So as I said, just stay on this slide and have a look at it before we move on to the next one. There'll be a completed petty cash book on the next slide, and I'll make some notations for you. So let's move on to the next one. Now what you see here is the completed petty cash book. So let's see the columns one by one. On the left side, if you see, there is total received, and then there is date, and there is details. You can write the date first, and then details, and then total received. It's okay. Again, the order is not important. And then on the other side, we can just make the dividing line little bold there. So we'll just take this is the dividing line. Just bear with us for a second. We'll make it bold. So this is your dividing line here, which separates the receipts from the payments. So if you see, this is the debit side of your cash book. So we can just make a notation that this is the debit side. So to the left of this, we can just write at the top debit. So that's your debit, and the total paid will be considered as credit. And we'll just change the color of these just to pop out at you that this is the credit, which is payments, and the debit is the money which is received. We'll just wait for a second. We'll change the color and we'll make it red color just to pop out at you. So total received is debit and the total paid is credit. And then the total paid has been sort of categorized as either postage, traveling, cleaning, or other ledger accounts, you know. So if you see the first thing, the period which it covers a period of 1 month, Fab. So on Fab 1 there is balance brought down. So can we just highlight that? So balance brought down, you know, it is coming from the previous month and it is $24. And then you see bank. The next one is bank. This is basically a check which the petty cashier has received from the main cashier. This is very important. So we'll highlight 96 and we will call this as we'll make a notation on the outside. This is the restoration of impressed. So we will make restoration of float or impressed. So this petty cash book you see here on your screen is started off with an imprest of $120. So basically the imprest amount or the float amount here is $120. This is the amount which has been decided by the business to start a period with. So $120 should be there at the beginning of each period. So if you notice, on Fab 1 he started off with $24, and then he got another $96, which is termed as restoration of float or imprest. So make the terms clear here. The $120 is called the float. So this $120 is the float amount. So this is your float. And if you notice the next period, it again becomes the same. It becomes 120. So every month the cash book, petty cash book should have 120 in the beginning, you know. So again, the system is called imprest system, where the main cashier gives the petty cashier some amount of money, and that money is called float. And then the petty cashier makes payments out of this, and then at the end of the month he sees how much is the balance left with him, and then he goes to the main cashier again, and he gets the amount that he spent back, so that he still has the same amount he started with the previous month. So in Fab he has $24 to start with, he gets 120, and then in March he is left with $11.6, and he takes from the main cashier 108.4 to make it 120 again, you know. And this goes on month after month, and generally the float is kept constant, although it can be raised or it can be lowered depending on the needs of the business. But we will assume generally that the float is a fixed amount which the petty cashier controls, you know. Now on the right side, if you see the payments have been split into 4 columns: postage, traveling, cleaning, and ledger accounts. The ledger accounts column will be used if a payment does not fit in postage, travel, and cleaning. And you have to enter the amount simultaneously in the relevant column and in the total paid. Like on 4th of Fab, stamps are bought, so we paid $14, so we're going to put it in the total paid column, and we also going to put it in postage and stationery column. Then on 7th, copy paper and cartridges are bought, and they'll be put in the total paid column and postage and stationery column. And then on 13th, train fare is paid, and the train fare will be paid and recorded in the total paid column and in the travel column, and so on and so forth. Once you have recorded all the payments and all the receipts, then you would add up all the analysis columns. So here you see analysis columns are adding up, you know. So postage is adding up to 47, travel is adding up to 19.4, and cleaning is adding up to 17, and ledger accounts 29. And all of these added up is giving you 112.4. So this 112.4 should be checked, you know, by adding down and across. So you add down the total column, and then you add up all the analysis column totals, and they will add up to 112.4, you know. And then you will see on the debit side, the total on the debit side, which is 124. We will subtract 124 and 112.4 to get 11.6, which is the balance CD, and this balance CD will become your balance BD for the next period. And then again the imprest will be restored either by taking cash or a check from the main cashier. So again, a summary: he started the month with 24, took 96 from the main cashier, and then $4 were received from the refund of the stationery. So the total on the debit side is 124. On the credit side, the total payments were 112.4. So 124 minus 112.4 gives you 11.6, which is the balance CD, and this balance CD becomes the balance BD for the next period. And then again the imprest will be restored. So 11.6 plus 108.4 will become 120 again, you know. So that does it, and we'll pause it for a while now. So on the previous slide you saw a completed petty cash book. Now just a bit of theory and some definitions which you can also read from the book. The pages number they were indicated in the beginning. Now petty cash book is a journal which records small payments of cash and receipts. Mostly it will be payments, so it will be mostly the payments. So we'll circle the payments and we'll just write mostly payments. So it will be only receipt will only be, so there will be mostly the payments there, and the receipts will circle them. Receipts will only be the float amount or the restoration of the float. So just bear with us for a second, we'll make a notation. So receipts will be the float and the restoration of the float. This is the money which main cashier will give to the petty cashier at the start of the period. Then the source document is the vouchers, petty cash vouchers. We can draw an arrow from the petty cash vouchers to the picture of the voucher which is given there. So this is your, just bear with us for a second. So we have got a picture of the petty cash voucher which you can find in your textbooks also, but just to see one here, this is your petty cash voucher. So if you notice, it has a number there, the petty cash voucher has a number, so we can just circle that there is a number. Like every source document has a number, and then it has the items, the details of the items. This is the items and the amount, and then at the end there are two signatures, that who authorized the payments and who received the money. So this serves as an evidence, you know. So the petty cashier will, whenever he makes a payment, he'll fill up this voucher and then keep collecting all the vouchers, and then when the next period starts, he'll take all these vouchers to the main cashier and gets the float restored, you know. So this is an evidence actually. And as in the beginning I said the money box, so he will just add up all the vouchers and then check it with how much money is left in the petty cash box, you know, and everything should tie up. On the debit side, as we said, it records the cash received, and on the credit side it records the cash paid, and I've shown you already that. So let's move on to the next slide. The impressed system, you have to memorize this definition. So the main cashier gives to the petty cashier an amount of cash which is called impressed or float to start off a period. So this in our example was in the completed example, it was $120 if you noticed. So $120 was the impressed. Then petty cashier makes payments out of this and gets the petty cash voucher signed, and then next period he takes all these vouchers to the main cashier and gets the impressed amount topped up or restored, you know. Okay, so the definition is there, you can read it and try to memorize it. You can go on. Once you have completed the petty cash book, then you know, the next step is the T accounts or the double entry. And the double entry would be basically debit side of each expense account in the general ledger. This you will take from the analysis columns of the cash book. So each analysis column of the cash book will be totaled, and let's make a notation. So this each expense will be going on the debit. We will take this total of each analysis column. So it's basically total of each analysis column, which will be posted to the debit side of the expense account in the general ledger. And if you pick up the amount from the ledger accounts column, then it will be debiting the supplier's account. So just bear with us for a second. Again, a summary. You will get the total of the analysis columns, and then you will post it to the debit side of each expense account. And if you picked up the amount from the ledger account columns, then you will debit the supplier account in the purchases ledger. So this does it for the lesson slides. You can read the pages in the book and then review this lesson on Nearpod and complete all the activities. So we'll stop it here.